Happy Wednesday, and thank you very much for joining another session of RM Smart Investing. I'm so pleased to have you. Today, we are going to go back to the commodities, and I thought with the crude oil being the story really this year, we're having a lot more interest than ever before, although crude oil is really the bloodline of the world economy. So basically, I thought this would be opportune time. And also, I think it's important that you stay involved with commodities. I know there's so much excitement with the stocks, but the commodities, because of their being fundamentally oriented, is much more into supply and demand than stocks are, and they're less manipulated. One story like today, stock of Manchester United goes up tremendously, go up 20% just because Elon Musk tweeted, that he wants to buy them. The stocks do have that behavior, but commodities, really have to have a lot of force behind it in order to move it. And they are more predictable in some ways that they're very much, again, they're very much pattern oriented, they're more predictable. So in that situation, I think it is important to at least have a sound understanding of how the commodities work. There are not many of them, so also it's more manageable. So we had done a small session on crude oil in the past, a couple of years ago. I thought it might be timely to go back and visit, especially it's in a pretty critical zone right now. So again, the crude oil, why we want to consider crude oil and why the commodities. I want to take a look at, this is the periodic table of the past 10 years. And you can see how the commodities have performed. And you see the volatility. As a trader, volatility is actually your friend. As long as you are managing your risk, there are opportunities that they present themselves every day. Now, in this situation, for instance, last year, we see coal was up 160% while it was down the previous year. When we go, and I want to take the energy sector, especially when you look at crude oil, why it presents itself as a great opportunity is, look at the volatility. 1 year is down 7%, next year is up 7%. 1 year is down 45 and then 30, and then it's up 45 and 13. Then the following year is down was 25, then it comes back up 35. Last year, it was 2020, when, if you recall, that big May event, it was down 21%, the pandemic, all the global economy. Now, with the 2021 is up 55%. And again, this year, it's been one of the biggest winners initially. As you can see, we have been having a low correction, which we'll discuss that. So that's the reason, it allows you to manage your portfolio in a way that it can be very rewarding if you do it the right way. Going back again to 2021, look at the top performers were mostly in an energy arena, coal being up on almost 161%, crude oil being 55%, and natural gas being 47%. So that's the beauty of the trading, the energy sector, which they have been underloved, especially the companies. And I want to look at going back to 1980s. And when you look at the charts, what you can see, 1980s, 1990s, and beginning of 2000, it has been really consolidating. I remember 1980 with the low teens, and really the highest it hit was during the Kuwait invasion with Saddam, and then the Iraq war, and basically it went to $40, and then it was very short-lived. The markets really overreacted. I never forget that. It happened this summer of 1990, January, I believe it was the 17th, when the United States decided to invade Iraq and clear that. So basically, that's the blip you can see. But other than that, it was really consolidating. And then it happens that the stretch after the really commodity cycle, the 2003, 2004, and we did hit, actually it was 140, but we hit 147 in 2008. And now you see the complete volatility. And as I mentioned, as investors and a trader, this actually offers you opportunities. So why we should consider crude oil? It would say there's thousands of usage for crude oil. What the main ones that you're familiar with, obviously, is the gasoline. It's the major usage of the energy for the cars. Heating oil, other products that it can range from actually even chewing gum to candles, and there's so many different usage for the crude oil. Jet fuel, obviously, propane, residual fuel, powering factories, large ships, and asphalt. So there's many usages for that. So if that's the case, what factors affect the oil prices? And again, with the commodities, I believe they're much more clear cut. And some of the commodities, even more so, they're much limited in the factors. Crude oil has quite a few factors, but like any other commodity, is based on demand and supply. So the global demand, and we can just go back to 2020. There was a shutdown of the whole economy, and guess what happened to crude oil? So it was very much a demand story. Then we have the supply. And when we talk about supply, we just don't look at the picture of the today. We look at what about the future? Are we going to have more supplies coming? And then obviously the other thing is we will discuss is the OPEC policies, the 15 countries which really control 44% of the world export, and really 81% of the total world oil. And then we have the geopolitical conflicts. We can go back, obviously, not long ago. We look at the Russian situation, and we look at what is happening in Ukraine. And then we look back, one of the biggest things that a lot of baby boomers probably remember is the 1973, 1974, the OPEC, the long lines of gasoline, and it was because of Yom Kippur, the invasion of Israel by Egypt and its allies, and then the United States decided to help Israel at that time, and then this whole thing broke out. So you can see how OPEC has effect, and also the geopolitical, they have effect. Then we have environmental policies. It's happening more and more now. So because of that, that could restrict the supplies. It could be because of the upgrading the technology for the producers. So the government and the politics of it, and it goes back again, let's say the environmental issues as far as controlling, let's say we talk about ethanol, and then the states also, so in the United States or overseas, again, the change of the governments, there could be more socialist demands. They want to maybe privatize the companies. They can affect and kick out foreign companies. So these are all the things that can affect the price of oil. And of course, the taxes, and you will hear probably more in the next few years, especially in the United States, because of the higher profit margins. So they can tax the companies and consequently increase the price of oil because of that. Logistics and infrastructure, again, it all depends on, especially you have pipelines, the currency fluctuations. Most of the crude oil is, it's in petrodollar. That means it is valued in dollars. So obviously the dollar affects the price of it. And now more than ever, the alternative energy is playing a role, whether it's the solar energy, whether you look at the electric vehicles. So that's also influencing the price. And then we are in the season of hurricane, the weather effects, basically shutting down or actually damaging the refineries, for instance. And then we have supply disruptions. It could be refinery fires, maintenance shutdowns, strikes. If you're in Nigeria, for instance, there could be acts of vandalism again, the strikes would happen in South America, for instance. And this is something, it happens very rarely, but it has happened in our lifetime. It is obviously we witnessed pandemics, we would never thought about it. And that was interruption. Again, there was no reduced demand. And of course, terrorism, again, that also makes the effect of the supply. So let's dive in and talk about, actually give you a little lessons as far as when we talk about crude oil, what do we mean by that? The most famous one, actually, the two types, is the first one is the West Texas Intermediate crude, and then we have the North Sea, which is the Brent crude. Now, that's, again, North Sea in Europe, and then West Texas is the United States. West Texas is right now actually is the most liquid, and that's what we trade in the United States, but we can also trade Brent oil. We will discuss that more. So again, the Brent is, well, more accepted in Europe, in Africa, in Middle East, in Asia. So that's what they usually follow. In the United States, we do the WTIC, and that's what we use, like NYMEX, and we can use that if we want to do futures. So now, some of the things we have to also remember, we had the fracking, and that also helped because of that more production. So the WTIC became the choice, especially the futures traders here. And we will talk about futures trading once we talk about the trading aspect of it. Now, that's one as far as the types, but also those are the two main for trading. But you hear about sweet and sour and light and heavy. So I thought, let's review that. When we talk about sweet and how the pricing works, when we talk about sweet crude oil, it all goes back to the sulfur in the basically as a complex of the crude oil. So when it's under 0.5%, that means it's doesn't have the smell, it doesn't have real taste, so it's called sweet. And obviously, the less sulfur there is, the better refined candidate it is. So when there is higher sulfur, it's called sour crude oil. So a high quality, low sulfur crude oil is commonly used for gasoline, and it makes sense, right? So you don't have to do a lot of refining in that. And the sweet, again, originates from the fact that, as I mentioned, because the sulfur provides the oil with a relatively sweet taste and pleasant smell. Now, the other, as I mentioned, there's a sour crude oil, and they have a higher, because of the sulfur, higher than 0.5%. Now, the light crude, what that means is it has a low density. And because of that, it can flow in the room temperature. And because it has a low viscosity and a low specific gravity and high API gravity due to the presence of high proportion of the light, hydrocarbon fraction, it generally has a low wax content. Remember, I mentioned we can use it for candles, for instance, or even soap they've used. Light crude oil receives a higher price than heavy crude oil because of, again, higher percentage of gasoline and diesel fuel can be converted, so it's a lot easier to produce that. So keep that in mind when we looking at their productions all over the globe. So basically, the favorite ones, we want to have sweet and we want to have light. So the higher, the heavier and the are sour, obviously they're less efficient, so the pricing does change. So with that in mind, when you look at like all around the globe, for instance, you see that United States, we have the WTIC, which is the WTI, and then LLC, where both are light and they are actually sweet. When you look at the Brent, North Sea, you see they are much sweeter and they're actually light. And we see the Algeria, and then the opposite is like Mexico's Mayan and Saudi Arabia's, they're heavy. Kuwait, they have, again, they are sour and heavy. And in Iran, we actually have, and Saudi Arabia, we do have a light and less sour, less and more sweet. So this is how you can see the pricing can be managed, because we talk about, again, the different exchanges around the world. Of course, we look at the CME and NYMEX here, but around the globe, there are, Qatar and has a exchange, and so different oils are being traded. But the one for our purposes, we will be focusing on more on the WTIC. So let's focus on the production now, the oil production, the biggest ones around the globe, believe it or not. This is as of 2021, actually in 2022, but going back to 2021, US is the largest producer. And then it's amazing, I noticed it's only 10,000. I mean, when you look at the South Arabia, it's like actually 10 million between Russia and Saudi Arabia. So, and then you see how each one of the countries represents. So you can see Iraq, United Arab Emirates, Iran, Canada. So, and then we look at the regions, we can see that Middle East is the largest, and then we come to North America and so on. And then, we have the Asia, we have South America. So that's as far as the production. But as far as the consumers, and that also plays a role, because one of the ways you can actually decide if you want to invest in a new economy, you want to make sure that how the price of oil affects their economy. So if they're big importers and there are less of exporters, then that means that the economy will be much affected. So in this situation, you see United States is the biggest, in this case, the consumers. I'm not even talking about importing, sorry. Consumers, we see the US is the biggest consumer of oil. And then it's China and in India. And you see the global share is up there. And because of the whole industries and what we have, so you can see when you go back 10 years ago, it was amazing. China was not near where it is now, obviously, but the US has always been biggest consumer. But also talking from the consumption going to the exports, that, the year that we've had, that also helps you to analyze a country and see that a higher price obviously helps their GDP. And in this situation, we have the top 15, again, as of end of 2021, we have Saudi Arabia, Russia, Canada, Iraq, United Arab Emirates, and USA, Norway, Kuwait, Nigeria, Brazil, Libya, Angola, Oman, Mexico, and Kazakhstan. Now, these top 15 countries, they ship almost 77% of the exported oil in 2021. Now, the fastest growing exporters since 2020, it was Libya, and we have Norway, Mexico, Oman, and Canada, Saudi Arabia, and Iraq. Now, the three countries went the other way. It was UAE, United Arab Emirates, Kazakhstan, and USA. So basically, they dropped. And USA became the biggest exporter. We were the net exporter. Now, as far as the regions, this is what I want to talk about from importing point of view. If you're in Europe, and you can see why there's so much difficulty right now with the conflict going on with Russia and Ukraine, how it's affecting. And once we look at the blue is the crude oil, and then the black is the oil products. They're the derivatives of oil. So you can see China also produces, but also imports. But a country like India, which doesn't have a lot of production, they're net importers. So because they're net importer, the high prices affect them. And that's when you're importing so much, you look for avenues to alleviate that. So that's why you make deals, let's say with Russia, you make deals with Iran, you accept different currencies or you exchange different currencies. So that's why it's important to pay attention. And of course, Japan is being a net importer. So that's important to pay attention to the countries that they import. Also, there are top 10 countries which that US imports oil from them. So our biggest partner by far is Canada. As a matter of fact, that's why U.S. economy affects Canada quite a bit. It doesn't go the other way, but it does. United States has a big influence in Canada. So because, of course, we are also importing a large amount from them. Then the second is Mexico, Saudi Arabia, Russia, Colombia, Iraq, Ecuador, and the United Kingdom. Again, we have the Brent oil, Nigeria, and South Korea. I just want to add this, just again, you will see the alternative, the renewable. As we can see, it's becoming more and more increasing the capacity. I want to look at where we were in 2011, for instance, when we were in 2021, come a long way. We still have a long way to go. So that's, but also you can see because of the environmental and also the high prices, you look for obviously substitution and alternative, but it will be a long time. So we've talked about that, but as I mentioned, OPEC plays a huge role. So I decided let's talk about OPEC in their own segment. So what OPEC is stands for Organization of the Petroleum Exporting Countries, or OPEC. And it consists of 15 countries. It used to be 13, turned to 14. Now, as of 2022, we are at 15. Republic of Congo, Democratic Republic of Congo, joined it. So, and what they do, as I mentioned before, they produce 44% of world oil, but they have 81.5% of the world oil reserve. And because of this, they work together, supposedly, to coordinate and unify policies because they know how much power they have. And there's a lot of times they give lip services, by the way. So they promise you something and they don't really follow up. So through its policies, it aims to provide a steady supply of oil to the consumers, so they become a little more predictable. Now, again, this organization started in 1960, and it was in Baghdad, Iraq. And it was by 5 founding members. It was Saudi Arabia, Venezuela, Iran, Kuwait, and Iraq. And in 1965, they set up their headquarters in Vienna, Austria. It's still there. And that's why if you want to pay attention when they say the ministers are meeting, for instance, they just have a new head of the OPEC. So they have influence. They can actually decide put the policies which affects the prices because of the supply. Now, as I mentioned, there are 15. Out of 15, there are 2 are from South America, 6 are in Middle East, and 7 in Africa. And I mentioned in the past how I think, we got to pay attention to Africa. So the countries, again, these are the 15 countries from Algeria, Angola. So Ecuador and Venezuela are the 2 in South America, Equatorial Guinea and Gabon. And then we have in the Middle East, Iran, Iraq, Kuwait, which are the founding members. Then we go back to Africa, Libya, Nigeria, Qatar from Middle East. And this is the Republic of Congo, joined, and Saudi Arabia, one of the original, and Venezuela, one of the original ones from South America. And then Middle East, again, we have UAE. Now, out of those nations that I mentioned, there are 6 from the Middle East. Now, Saudi Arabia is really because of their reserves, they're the de facto leader of the organization. And Indonesia has been in and out. They went out in 2008, came back 2000, but then they left again, or they were forced to. And throughout the years, there have been many observers of the OPEC meetings, such as Mexico, Norway, Oman, Russia, and Egypt. So that's it's important to know, again, the politics of it. When we talk about Venezuela, which is very sad, it's a very rich country. They had the largest reserves in the globe. And unfortunately, this is the economy right now. Going further, this is from 1998 to 2021. So you can see the production, what has happened every single year. So you see this setback in 2020, and then we see it came back in 2021, obviously with the opening of the economies. And also, again, we're looking at the oil reserves, basically OPEC, that's what I mentioned, about almost 81% of the world reserves are lies with OPEC. So you have Venezuela and Saudi Arabia alone, they are 46% of the reserves. Then we have Iran, we have Iraq, and so on. So you can see how much control they have. As far as the production now by region, you see the Saudi Arabia produces, this is as of March 2022, by the way, Saudi Arabia produces 35.8, Iran 9%, Iraq almost 15, United Arab Emirates 10.4, Kuwait 9.2, Angola, Nigeria, Venezuela, which all the reserves only 2.5%. Speaking of OPEC, I thought this is important for you because I think when we do the calendars of the events, I think you want to pay attention because that could be a market mover. You want to see when they have their monthly meeting. So I just wanted to offer you this calendar of events. They just had it August 11th. It comes at 7 a.m. and we have September 13, October 12, November 14, and December 13. So pay attention to these dates and forget about the time because it's not 1 hour event. It's a meeting. Sometimes they have a 2-day meeting, but then they come out and talk about it. So you want to follow these dates. So speaking of that, so now you know the fundamentals of the oil, what factors affected, what for the supply and demand, where the production is coming, what countries you have to pay attention. One of the things not many people pay attention is the seasonality. And as a matter of fact, you will see how you could have taken advantage of it. Let's say this year, crude oil had so many factors going for it, especially with the conflict and obviously with the supply issues. And basically with the opening of the economy, but the seasonality plays a role. So let me just explain, and this is going back from 1986 to 2018. You have to remember, if I'm not mistaken, 90% of the world population lives in Northern Hemisphere. So that dictates basically how the seasonality works. And basically when we talk about winter, we're talking about the Northern Hemisphere. So the winter, it happens from December 1 to February 28. And in that, it's usually the winter oil prices are the lowest of the year, believe it or not, except if there are some unusual events, let's say really cold and other than that, the prices remain depressed because you have to remember, when we hear the news, as if the news happened now, the news usually happen after the facts and things have already been prepared. So inventories are built up. So if I'm going to have a cold winter is coming, I want to have my inventory. I'm buying the things now as whatever it is, so heating oil. So I'm not going to wait when it gets cold and go call and say, well, send me some crude oil. So basically, these are done before the fact. The same thing in spring, they usually start appreciating. And why is that? It's from the lower of the 25% is because now we are having the summer driving. And what happens is because of that, we're building inventory and there's a bullish sentiment. So what happens, actually, the prices go up and then we start actually strength of the pricing, and this is to 2018. I'm going to show you a chart. Actually, the pricing in summer starts going down because the summer, again, the summer driving and flying and traveling has already started. So the inventory goes, accumulation goes up to May, and starting in June for the summer, we start going down, and then in fall, we start peaking. So I think the chart will help us more. So we can see this is different years. As you can see, it goes back to 2015. What happens seasonally and the weeks of the year. And again, I want to emphasize that one's from 1986, but I want to emphasize that it is from June or July, actually the prices go down. So this might help you. So the information we have, this is as of for the 30 years from 1982 to 2012. So it was a different cycle. So I want to bring you back to this cycle. So let's first take a look at, and that's the reason, the first information I gave you, that was, up to 2012. You can see in August, we start moving up, and in September, and then things start going down. So that's what it used to be. Now, this is more recent. This is for the past 20 years. So what happens in the past 20 years, you see from March till end of May, and actually even June, we have really strong, as I mentioned, it's the summer traveling. And then July and August, we get softening because now we already built that inventory. So if I had access to this information from the seasonality point of view, I would have taken profit somewhere around here, because I know the driving season started. That's something that I would take into consideration, that they are going to be using inventory. Of course, this year also we are talking about, again, external exogenous events as well, but this is for the past 20 years. This is what has happened. Then in September, generally we go up, and then remember the winter season starts, and actually we start going down. This is again the same chart in a way of, I want to break down from on month basis, the percentage of return. You see like August an average negative, September, October is negative, November is negative, and then but May and April are pretty strong, so in June as well. And then of course, what was the best month or the best return in that month, and what was the worst? You can see in October we've had the worst return, 32%. On the other hand, we've had in May, that was in 2020, if you recall, because we went to negative. I believe it was like we went to 37.20 or something, and we had an 88% from that negative. So a big anomaly. So just take that with a grain of salt. But you can see the percentage of times that have actually gained. So that's from the seasonality. But also want to look at the past 20 years. We want to look at how it has behaved relative to gold. And we can see since July 1st, gold becomes favorable compared to crude oil. And the same thing that against stock market. Again, July we have peaked, and basically the rest of the year except September, which is the more seasonality wise, as you know, is the weakest for the S&P. So crude oil becomes stronger relative to S&P, and then basically the strong seasonality of November 1st, which starts the seasonality of S&P, we have the weakness. As far as this is for the past 16 years, from April to July, the best days are basically Wednesdays to trade crude oil. And of course, we will discuss it. Wednesdays, you have the inventory numbers also. And the worst days based on these 16 years, the worst days are Mondays to trade. So with all that information, let's see if we put everything together. So if I'm really interested in investing in oil, or I want to trade oil, what vehicles do I have in my position I could use and be able to make profits? So let's start. There's a few things we can do. We have futures, and we started futures. So with the futures, you can do crude oil, which is the WTIC, the Western Texas Intermediate. The root symbol is CL, and that 1 point represents $1,000. So that's the big contract. You could also have the E-mini contract. It's a QM. So instead of $1,000 per point, you have 500. So you cut your margins in half. You can cut your risk in half, but it's not very liquid. So CL is very, very most liquid, the most liquid contracts out there. So, and now recently, as you know, the micro has become very popular. if you want to be a swing trader, and you, as I showed you, once the crude oil has the trend starts, they like to follow. So if you want to do the trend trading, it might be better idea if it's going to be, again, for a longer term than day trading. You want to use micro, and you should use like a multiple contract. So sometimes it's easier, rather than buying one CL contract, maybe you should do 10 micro contracts, so you can manage your risk much better, especially if you're going to stay in that position. So micros are good. So instead of $1,000 per point is $100. So, or every penny is is $1 rather than $10. You could also do Brent if you like. Is the root is BZ, and the months are a little different. So now our near month is September, which is the U, but for Brent is actually October. Another thing I put here, I will give you an example. There's a differentiation in the prices. Generally, most of the time, the Brent, which is really light and sweet, and because it's usually from the North Sea, it has more accessible and it has a higher premium than the WTIC. So usually it's more expensive to trade Brent than WTIC. And what happens is you can sometimes really get wide spreads between these two. So you can actually do a spread trade, which I will share with you. So that's another thing using futures. Other thing is, if you want to be an investor, basically what you could do, and you want to be a little longer term, then you can use the ETFs or ETNs. So we have the USO, that's the WTIC, and it's on the futures. Or you can do BNO, which is on the Brent oil, or DBO, or oil K. And oil K, the reason I put it in color, you remember a lot of these ETFs, sometimes you have to file K1. Now, oil K allows you to avoid that, so you don't have to do the partnership and filing. So it's a lot easier for your taxes, especially if you do it in a non-taxable accounts. You have XLE, XOP, OIH. You have VDE, which is Vanguard. But anyway, you have many options with ETFs or ETNs. You can invest in energy stocks if you like, and these are more of an integrated oil. So it's not just the exploration. These are the biggest oil companies around the globe, whether it's Exxon or Chevron, whether it's the Shell or British Petroleum, or PetroChina, or Petrobras from Brazil, or the Colombian oil company. So these are the ways you can also play the crude oil. The other thing is, you can actually, rather than, if you have especially limited capital and you really don't want to you want to have limited risk, because with the futures, you're really, you're using margin. So really you have almost unlimited risk in a sense. So with options, you can use strategies with options. Some of that you can spread strategies. You can do the same thing. You can do the calendars. You can do iron condors, butterfly. It applies the same idea. You can use the futures. You can use the ETFs, and you can use the stocks. So you have options available on all of these. Last but not least is something you might not think about, but it also is it's available, and it works well, especially if you do Forex, for instance, or you want to do trade currencies. These are called, these are petrocurrencies, and very much they kind of follow, or they're close with the crude oil. So we have Canadian dollar. So I didn't want to put all of these, but Canadian dollars, like you can do Forex, like USD CAD. You can do Mexican peso, you can do Colombian peso, or Brazilian real, or Norwegian krone. So Norwegian krone, Brazilian real. So basically, these are some of the related to crude oil economies that you could actually use. Okay, so let's dive in and talk about the futures on crude oil. As I mentioned, we talked about mainly the WTIC. Now, it's as I mentioned, it's very, very liquid. Nearly, it's 1.2 million contracts trade a day. They usually have 2 million plus in open interest. Now they are very close to US production. So it is, they're, the WTIC and BNL, I mean, Brent, they are basically the standards, but WTIC is even more liquid now. So there's a lot of trading is done with it. And their settlement is in NYMEX, is very much close to spot market. Besides, it kind of reduces the cost if you did it this way. One of the things about futures, and I've emphasized that if you can get into futures, it's very attractive, is one of the things is ease of filing. You do not get hundreds of pages of your option trades or stock trades. You get just one piece. Your 1099 comes and it just tells you this is your profit or your loss. So you don't have to itemize everything, and you get a 60-40 long-term tax advantage. So even if you're in a trade for 1 minute, you still 60% of that is a long-term gain. Only 40% is a short-term. So if you're heavily involved with the futures, this really becomes attractive. And of course, you could also, from the tax planning, if you want to start it as a business, as a trader, you could also, which we've discussed in the past, that could be another avenue. But that's the beauty of futures. And obviously, they offer a big leverage. So this is just want to share this to you, the daily volume. This is as of yesterday. You can see how the options volume and then actually contracts. Again, this is August, so sometimes it's not as not liquid as active as possible, but still it's pretty good when you're talking about almost 1 million contracts being traded. So these are some specifics about the crude oil, and again, the WTIC. Again, each contract represents 1,000 barrels. So if you are, the oil is $100 right now, your one contract, you're controlling $100,000. So basically, you just want to be aware of it. That's what it's so attractive. And that's why, like, if it moves 1 penny, it's equal to $10, like we can see. Now, it opens from 6 p.m. East Coast time, which is 3 p.m. Pacific time, and it closes 2 p.m., very much like your general financials. Do the S&P, they have a 1 hour break and the clock keeps going. Now, this is the settlement hours. You want to pay attention. The settlement hours, each commodity has its own. For instance, gold is 10:30, or in this situation, we are looking at 10:30 Pacific Coast time. Crude oil is like 11:30. So these are the things that you want to pay attention. But the main thing is knowing that, that this is what you're able to trade 23 hours a day. And basically, it's a very liquid contract. So who controls this market? Unlike other markets, the majority of players in the crude oil, they are the professional traders and they are the commercials. It's mainly done for hedging activities, whether you are, for instance, your Southwest Airlines or even Exxon. They actually have their own trading and futures group that they trade, and they have to protect themselves. So generally, retail traders play a very small role. They're the small players. Again, because there's just so much activity is done, and it is, as I mentioned, it's the bloodline of economy around the globe. So the only time is the times like we are in, when you go to a party and people start talking about crude oil, then that's when you have to really, your ears perk up and you see the really retail traders are getting involved with this and they're playing momentum. I just share one little story, but it's part of, just to get that experience. In 2008, I was actually in a gathering, in a party, and we had this famous a very successful doctor, and he got into trading crude oil. And the crude oil, as you recall, it passed 100 and it kept going up. I mean, it stopped around 147. But he thought that 100 that's very expensive, especially when I showed you where we had been in the past 30 years. So our bias shows up. It tells us that, oh, crude oil has been around 40 or 50. There's no way it's going to go to 100. So he started shorting it. And as he accumulated, rather than, again, having a risk control, basically he decided to double down, as they say. And it went to 120. Well, what I heard, I didn't see him in the parties again. And unfortunately, he lost everything. The margin calls happened. He didn't get tankers in front of his house, but he was just doubling down because he believed there's no way oil can go up. Of course, after that, he was right. If he would have done it the reverse, after the financial crisis and the whole world, when it fell apart, we did have a collapse. By then, it was too late. His wife divorced him, and it was just a sad, sad story. Very successful professional. And you cannot, again, dictate your own biases and opinions on the markets. The markets know the best. You just have to follow your discipline, and things like this happen. So what I did, I want to share this with you. Last night, actually, I thought, so I'm going to do this class. I hadn't traded crude oil for a while, and I decided, all right, we are in it's an inflection point right now. And I spoke with you about all the moving averages. And this is as of last night. And I took a picture. And as you can see, we are in a 200-day moving average on crude oil. So my bias, although the trend is down, you see we have a lower low and lower highs. And we still continuing. But and the money flow is trending down. But usually you get a little bounce when you have these major supports. So what I decided, I knew, my downside risk was very low, because if it would have gone below the 200-day moving average, but my upside reward was pretty good. I mean, it would have been like 4 or 5 to 1. So it's 8 o'clock at night, and I said, the MACD was positive. We were above the moving averages, and this really quiet time in some ways. But that's the beauty of crude oil. There were still volume. You can see there were like 12,700 contracts that changed hand at that, by end of the time. So I got in, and I don't like to go one contract. I like to do 2 contracts. So basically, I did 2. Things were reversing. The MACD was getting tired, so I did close 1, basically just because I wasn't sure how much longer I'm going to stay. But I did put a target at a round number, and it was at 87.50. The round numbers are important in the commodities, and especially with gold and crude oil. So I put it at 87.50. So I made $20 here, my first contract, but I made almost, I think total I made like 400 and change in these 2, and I got out at 10. It got hit. So this is it is pretty trend following, in the sense that it is clean. I didn't want to use all kinds of different indicators. I just used MACD and moving averages, and we were getting away. You can see from this 20-bar moving average. This is a 5-minute, by the way, chart. I could see, there was a nice candle, but also, I had put a target based on the number, but you could see that it was getting, even though it was a nice candle, but we're getting far away from 50 and 20. So coming back, this is what happened. I was up at 4 o'clock this morning, so I was curious what happened after that. And as you can see, we basically, MACD cross came back, and as I mentioned, we were far away from the moving average. We came back, kissed that 50-day moving average, and bounced back, and that became our high of the day. And at that time, and then we had this struggle, and then basically this is as of 4 o'clock. So, but end of the day, also took a picture as if nothing has happened. So basically, we closed at again, it was 87.70 or so. So basically, it was the time that I got out at 87.50. So we still are in that support. Again, the trend is down, but this is where there's a big battle going on. So pay attention to that. And that's why I want to give you all the other avenues if you want to play options or anything similar to that. Maybe if there's a bounce, maybe you can do debit spread and one of the ETFs. And basically today, I believe the energy sector was one of the very few winners. So again, money flow is negative. The trend is negative. We are below every single moving average. So short term doesn't look good at all. I mean, the long term, even short term we want to see if this is going to hold. Also, from the fundamental side of the things, 85 is a very crucial point from the break even of we talking about the reserves. They had to releasing, remember a couple of months ago, President Biden decided to start releasing those reserves. And, in order to do that, it was $85 to $86 was the break-even number. So I want to pay attention to that. So that's that. I just want to finish it with the spread I mentioned. So this is, I'm interested. I like to do the cross commodities spread like gold and silver, or we can do cross financials. Like for instance, you can long S&P and short NASDAQ, but you have to be very careful because the ratios are different because they're different completely numbers, or Russell. So basically what I want to look at the ratio of, in this case, you can see the WTIC to Brent. So what happens when we are overextended? Basically, it means one of them is more expensive relative to other ones. So basically, in this situation, Brent was undervalued because WTIC was actually trading 1.01, and this is the time that basically the Ukraine invasion is happening, and we hit over $120. So so these are like the extreme points, and I look for whether I want a long one and short the other one, or I see there's a value in one of them. So in this situation, if crude oil was being WTIC was more expensive, if I wanted to invest in crude oil, perhaps it might have been better to, for instance, if I'm going to do an ETF, use BNO, the Brent oil. Now, right now, on the other hand, now we are the WTIC has more discount relative to Brent. So you can see how low we are. So again, maybe I will buy WTIC and short the Brent, and so they can get to the moving average or so. Another way you can look at it, I look at both of them and I look at the space. So this is the CLU. Again, this is a September contract. We have the BZV22. This is a 60-minute chart. So sometimes, first of all, I want to see if they follow each other and how similar they are. And if I see, again, I go back to 30 minutes if I want. If I see there is a gap is getting bigger, we don't have a big one right now, but if it is, then I take advantage of it. For instance, if this is going down and this is going up, then they're converging, then I'm going to use buy the undervalue. So this is just the food for thought. I don't have to use this, but I think it will be a good idea. I like these ratios. If you can, see for more of a swing trade, I think that will be helpful. The last but not least, this is very important in a sense that every Wednesday we get the crude oil inventory, and it basically tells us, and it comes from the EIA, and the U.S. Energy Information Administration, and they have so many good information. It's all for free, and they come as far as Pacific Coast time at 7:30 every Wednesday, unless if Monday was a holiday, they push it Thursday at 8 a.m. So at 7:30 a.m., be aware, like we had it this morning, for instance. So they come up with inventories, they tell you how much is in storage, what is happening. As you can see, the release date was August 17, which is today, and the next one will be August 24th. So pay attention to these if you want to trade crude oil. And basically, it is a good instrument. It have a nice trend. If you get in, you can have big winners. If you control your losses, there are some big moves in crude oil. So just be aware of that. With that in mind, I hope it was educational. You got something out of this, and hopefully you dip your toe and those in that, and maybe do some trades. So in that case, I appreciate it. I will stop recording, and we'll open up for